is Daniella Cambone reporting from the Toronto Cambridge House show. My next guest, Jay Taylor, is the editor of Jay Taylor Gold, Energy and Tech Stocks. He's also a radio host for Turning Hard Times into Good Times. Don't want to mess that up, Jay. Thanks so much for being with me today.
It's a pleasure. Thanks for having me.
So Jay, you're also a self-proclaimed gold bug and proud of it.
Yeah, yes, I am. I can go back to my college days when I had a professor of history, actually, that thought there was a correlation between the debasing of a currency and the work ethic of a nation and the morality of a nation, actually. And I watched what was going on then during the Vietnam years and America turning to socialism, and we decided that we could have all of that without paying for it. And so we detached ourselves from gold, because if we had stayed on a gold standard, we wouldn't have been able to do those things.
Let me stop you there a second, Jay. Let's back it up 1 second. Let's look at physical bullion versus gold stocks. This is the million-dollar question of when will gold stocks pick up again? I was at the Denver Gold Forum recently, and I met with Don Cox over at BMO, and he was saying that gold stocks are already performing better than gold. What do you think about this?
Well, I think recently gold shares have picked up a bit. I think that gold bullion was way ahead of gold shares for the longest time, so I think they're catching up a bit. But I think that basically gold, I like to look at the performance, the profitability of gold mining companies more than the shares. In fact, I like to keep some cash on the side for opportunities, so that if the earnings continue to rise as dramatically as they have for the gold mining companies and the shares don't respond, I find that as an opportunity, because I want to buy value. I'm a value investor. So the gold mining companies' profits have surged since the Lehman Brothers decline. Very dramatically, have tripled, in fact, the 7 major companies that I follow. The share prices have not reflected that yet, but I believe they will. The main thing is, I think that we have a lot of competition out there for gold. I don't think that people really understand gold yet as money. We haven't seen any euphoria about gold now. The masses of people are not yet into gold, and the same thing for gold stocks. What we're seeing is people are buying, they're into tech stocks. I mean, What's all the talk?
But the masses of people going into gold, you still need money to be in gold, though, right?
That's
at $1,700 an ounce. Not just everyone can play this game.
That's part of the reason, I'm sure. And this is part of the problem. I think that we are honestly in a depression, and the middle class is getting wiped out to a great extent, which is also bullish, I think, for gold being remonetized, and we're seeing that probably happen and play out now through Europe. In fact, the Basel III Accord is talking about the need to make gold equal to paper money and treasuries.
Just going back to gold stocks a second, when I was speaking to some analysts, they think that they'll start performing well again, because it seems that companies have their act together now. That's what I've been told, that there are more geologists entering the field, that they're better structured. What do you think about this?
Yeah, I think that's one of the problems that the mining companies have had. I think also philosophically the mining companies haven't really understood the product they're selling. They haven't really looked at gold as money, and so I don't think that investors see the need to own gold stocks for that reason. They look at it as any other commodity. But I think you make a very good point. The industry is so cyclical. It's got these long-term cycles. And so there is a period of time when it takes time to retrain people and to come up to the skill sets, to have the skill sets that are necessary. But I would really say that the companies that you saw at the Denver Gold Show are the companies that are advanced, are in production or near into production. These are companies that are going to be able to hire the best people away. And there will be a lot of junior mining companies that won't make it, because we are in a situation where it's very, very difficult to raise capital unless you have a project that's really real and big enough to attract the attention of major investors.
Well, Jay, that's a good point. So I hear that 95% of the juniors won't really amount to anything.
Right.
You obviously are plugged in, you know which companies to choose, but for an average investor, how do you pick those winning 5%?
What I would suggest to most people that don't have the time to really understand exploration companies, that don't have the time to do their own homework, they can go to a mutual fund. That's one place to start. I like the project generators, like a Eurasia Minerals is an excellent example. There's other, Renaissance Gold is another one. Companies that are project generators, that have sound management teams, that have a portfolio of projects, that have other companies spending their money to do the high-risk exploration. And sooner or later, those companies are going to hit on one major project and drive the stock higher. I mean, Eurasian Minerals is my favorite there because they have, because they have such large projects and they have major mining companies spending major dollars to explore major deposits. And they have cash flow coming in $6 million a year through a royalty that's going to, I think, double or triple in the next few years. So that's a company I think is a low-risk way to play it for the average person. So the Project Generator, another company I like a lot, is Sandstorm Gold, because they're really the Silver Wheaton model applied to gold.
That's Nolan Watson.
Nolan Watson is brilliant. He came over from Silver Wheaton, and that is a very low risk way. And they also have a piece of, they have a portfolio of producing companies, producing projects, I should say, that have very rapid growth prospects. So that's another way that the average person could play it.
Let me ask you this: if someone was debating between going into physical bullion or gold stocks, what would you say? What would you suggest? How do they make that decision?
Well, I think people should start out by owning some gold physically to start with. And I would throw silver in there too. We haven't talked about silver too much. I'm much more of a gold bug than a silver bug. But and then I would say it's, everybody's different. But, I think that having at least 10% of your portfolio in gold in one form or another, I would start out personally, because I'm such a gold bug, 10% gold bullion and probably 30 or 40% in the stocks. But then I spend my time and I write a newsletter about mining.
Jay, thank you so much for your thoughts. But could I get a projection for you for gold before year end?
Well, I think, nothing's for sure, but I think $2,000 an ounce is certainly within the realm of possibilities. But I really look at the real price of gold more importantly, and I judge it against the Rogers Raw Material Fund.
Value of gold?
Yeah, well, what an ounce of gold will buy? What can I trade it for? And here's why the major mining companies are doing so well. Before Lehman Brothers, an ounce of gold would purchase only 17% of that basket of commodities, the Rogers Raw Materials Fund. By March of 2009, it would purchase 44%. And we're on a steady uptrend. So gold is continuing to gain compared to base metals, compared to energy, compared to food items and clothing items. And that's why I'm very bullish, because it's when these confidence is being lost among the sophisticated investors. The masses don't have a clue yet, but the sophisticated investors are saying, I think I've got to have, like Ray Dalio says, oh yeah, I've got to have at least 10%. Everybody should have at least 10%. And so the real price of gold is more important to me as an investor in mining companies, because if the real price of gold goes up, the profit margins go up for the mining company.
Jay, finally, besides gold and silver, which I know you love, anything else you like these days?
Well, yeah, I think there's, selectively I like some energy companies. I look around at some in safe areas, like there's a tiny little one I had on my list that's in Alberta. So yeah, I mean, there are some things, and honestly, I'm looking at a technology company that purifies water. It's maybe one of the most exciting companies I've looked at in a long time.
So you were going to tell me bacon as well. Apparently, there's a huge pork shortage that will happen shortly.
Well, I'm not into pork, and I try to stay away from that in my old age. So
Jay, thank you so much for being with me today.
Pleasure to be with you. Thanks for having me.
And thanks for watching our coverage from the Toronto Cambridge House Show. We'll have more videos for you. In the meantime, you can email me at newsfeedback@kitco.com. Reporting from Toronto, I'm Daniella Cambone. Jay, thank you so much.